Hey, everybody. Welcome to the morning market briefing. It's Friday, January 23rd, 2026. Hope you are doing well out there and you're ready for the weekend and the massive winter storm that I think might not be as massive as people in Atlanta are bracing for, but we'll find out. Let's jump in. Earnings. Intel down 14%, Ben. The question I have is, how does a company that controls its own manufacturing fail to meet demand?
If they're not manufacturing very well. And I think that that's been the problem with Intel for a number of years now. I mean, this used to be a company that used to really be strong in design as well. So their margins were over 60%. Now their margins are in the 30s. And as they shift to become more of a fabrication partner or a fab. So in client compute or PCs, the traditional business, it's not going anywhere fast. It was basically in line with expectations. Data centers continuing to grow. They're actually growing faster in traditional servers than even in AI from a total dollar standpoint, which isn't surprising because that's where they're strongest. But I think they underestimated that just a little bit, and so they need to shift more resources from the PCs to the data center, which I think the new management team is actually doing a fairly good job. But it helps that they're following a period of a few bad CEOs. It's like they say in football, never be the guy who follows the guy. You want to be the guy who follows the guy who follows the guy. So like, you don't want to be Kalen DeBoer. You want to be the person who comes to Alabama after Kalen DeBoer.
Yeah, you don't want to be Mac Jones.
Yep.
This is a total side tangent, but released this week, Football, which is the name of the book by Chuck Klosterman. I'm about a third of the way through it. Unbelievable. You should buy it, read it. It's not what you think. It's just an absolute deep dive into the idea of football as it explains the second half of the 20th century. And I'm enjoying it so much. You should all read it.
It's my weekend reading. I'm excited. I'm ready to get there. Sorry, where were we?
Yeah, so Intel
You really threw
That's
me
on
for a
me.
loop
That's
there.
on me.
I mean, Intel basically saying, we'll get there, but it won't be this quarter.
Capital One down about 3%. The results themselves weren't that bad. People who are wondering about, existing concerns for the consumer delinquencies and charge-offs were on the lower end of expectation, down quite a bit year over year. What's pushing the stock down then?
Yeah, so good credit quality, fairly good volume, decent interest margins. I think that we'll see where the stock ends up opening, but they're also making this acquisition of Brex. So people who aren't familiar with Brex, it's a Silicon Valley fintech company that attracted a lot of private capital. And for a while there, I thought it was going to go bust. But they actually acquired the company, that a startup that one of my buddies founded. And we actually had him on the podcast a few years ago for a lot of money. And so it's good that Brex is now getting bought. 50-50 cash and stock. So I think this will be really interesting. I think that it's on the heels of the Discover merger. I don't know why you buy this kind of roll-up private deal at such a big premium. I know a lot of small businesses use Brex, but I am fairly confident they're not profitable. And I think that this is a bit of a mistake, frankly, from Capital One. $5 billion for them is not a ton. I mean, this is a market cap well north of $100 billion. But I would not have done it. I think it's a great exit for Brex, and I think they've been looking for a buyer for some time, and now they can exit stage left.
They can Brexit.
It's going to be a tough time. I mean, staring down the barrel of Trump trying to cap credit card fees at 10% for a year, making an acquisition of an unprofitable company seems like maybe not the best idea. I think I would just be like, hey, let's see where this goes before we do anything.
Yeah, I mean, you just made your biggest merger in history. The problem when you make an acquisition, especially if you make an acquisition of a company that itself has made a lot of acquisitions, is that you don't know exactly what you're buying. And we see this a number of times. You'll buy a company and then immediately have to take write-downs on it because you realize that not only do you not know what they own, they didn't know what they owned. And
Nice.
and we've seen this a number of times, and I think that I think it was very foolish for Capital One to do this. Maybe they'll make it work, but I don't see the strategic value at all.
I can't wait to see who they choose for their commercials as they scale down profitability. Because like right now you got Jennifer
Capital
Garner, you got Samuel
Capital
L.
One
Jackson.
Bank guy.
Yeah, we got
The
John
Capital-
Travolta dressed like Santa. But you're gonna end up with like some real B-level actors.
Does anyone think the Capital One Bank guy is a good face of the franchise, so to speak, like akin to the Geico Gecko? Or I mean, I put him squarely below the Liberty Emu,
Oh man,
which I can't stand.
Lehman?
But I can't stand the Capital One Bank guy even more.
Follow-up question: how do you feel about Doug? Because it's Limu the Emu
And
Doug.
Yeah, come on, man.
Yeah.
He's no Jake from State Farm.
No, not even the original one.
Yeah.
People forget Jake from State Farm got absolutely market corrected.
Yeah. He was out.
Yeah.
Trump did comment on Air Force One that he thought his plan for credit card fees being capped at 10% would need congressional approval. I don't think people are necessarily surprised that might be necessary, but we'll see how that goes. I mean, in theory, I would see this be something in which we would see a lot of back and forth, a lot of social media posts, people really taking this populist stance in Congress and then ultimately doing nothing about it. That's my expectation there. CSX up 3%. Then
they actually posted a really strong quarter in intermodal, which is kind of what you think of when you think of consumer goods or anything that gets shipped on the train, other than chemicals or coal or timber or steel. So intermodal did very well, but coal was a little bit hurt by the train derailment in the quarter, and then merchandise is just mixed. This is very much going into the industrial end markets, and CSX basically said, we feel okay about the consumer, but the industrial side of the economy is really uncertain as we head into 2026, which I would say is a take that we're hearing from companies, but we're not hearing from analysts. I think if you look at the big risk factors for 2026, it is capital spending is going to rip. We're going to have 7%. I was listening to Kathy Wood last night on Bloomberg.
Ew.
Saying we're having 7% GDP growth because there's going to be so much capital spending and all this build out and construction. And I don't know if that's going to be the case. I think that people are, for the first time in a while, people are more bullish than I think they should be on the return of big capital spending.
I think I figured out why Kathy Wood has underperformed so much, despite the fact that, technology stocks have performed so well. And it's because we've all been investing in AI, and Kathy Wood has been investing in AI. She really emphasizes the I. She was on TV yesterday in the office, and it was really throwing me off. She'd just be like, the thing about AI is, she just kept really hitting that I. So she's actually been working on just regular intelligence, I think. Little artificial. We've been more on the artificial part of the.
Well, what's interesting about Kathy Wood is that she has not invested in, or for a long time didn't invest in NVIDIA. I feel like she invests in these things that people were big on
Bitcoin
10 years ago. Like I think she was big on, I think she bought Deere at one point. I think she bought PayPal maybe at one point.
She said that autonomous vehicles are a $26 trillion market, which is, a lot. That might encompass more than 50% of the world's GDP.
She's
currently.
She's big on CRISPR gene editing, but CRISPR was a technology that I saw in 60 Minutes like 15 years ago.
Yeah. It's also a drawer in my refrigerator.
Yeah.
You keep your vegetables.
Yeah, you got to keep them. Got to keep them crunchy, man. Bank of Japan, Tom, keeping rates unchanged, which was to be expected.
Yeah, there wasn't a real surprise here. The good news is they don't have to raise rates because they continue to raise themselves in Japan. So I think that really has driven quite a bit of volatility this week, especially on bonds. But they're expecting inflation to kind of settle out around 2%, which would be great news here, but for them is absolute chaos because they've been running at 0% inflation for my lifetime and yours as well. So something to keep an eye on, because as volatility kicks up there, it also kicks up everywhere else because they're the bottom of the rate stack. But no splash today, which is, I think, fortunate heading into the weekend.
Next week, busy week. You guys are out some skiing. We actually will not have a call on Tuesday. We don't have a producer today. We got a junior super producer, Harrison Fish, on the ones and twos, keeping us clean. But we will not have a call on Tuesday because Sweet Hicks will be on his way back and Fish will be on his way out. So no call Tuesday, but big week. We're getting a tariff ruling, maybe, in theory. We should actually get it from the Supreme Court, and a Fed chair nominee coming through. Where are we standing on that, Tom?
I don't think anything will happen. I hope that I'd be interested, though, what happens if we get an announcement on the new Fed chair ahead of that, because it's supposed to be imminent at this point, sometime this week, maybe next week, and how that might shake up the vibes. But I don't think that will facilitate a change in direction immediately. But I think that for right now, everybody's in wait and see. I mean, we're just in a very unusual situation as it relates to what's inflation doing, what's the jobs market doing. GDP is ticking up. So I think that Jay Powell is probably just going to sunset by not doing anything unless something changes majorly in the next 3 months. I think he just walks without changing rates.
Yeah, I'm inclined to believe that if Besant says it's going to be next week, that Trump probably make the announcement. So I agree with you on that, Tom. My question is, do you think that happens before or after the Fed meeting?
So you can pair it with we should have lowered rates.
Jay
Powell's an idiot, and we're replacing him with beautiful Rick Reeder, handsome, strong, wide-shouldered Rick Reeder. Guy's got a dome on him. Yeah. He's a wide-bodied man. Like he's not heavy, but he's broad.
Yeah, he gets up at 3 a.m. every day.
I mean, the market doesn't open until 9:30. You know what I mean? Bond market kind of gets rolling around 8:30.
I do want to point out that Ben said that as if it was crazy. And Ben known to get up at around 3 a.m. quite often.
During this calendar week, Ben told me he got up at 2:45.
So Reader's sleeping in.
Yeah. Early bird gets the worm. So unfortunately, Ben took the worm from Rick Reeder this week
at least once. Ben is very wormy.
Snatched it up.
We'll get lots of economic data coming through, but tons and tons of earnings. Ben, what companies are you really looking to for a read as the year starts?
I think that thematically, I'm looking to see, probably unfortunately, that companies will probably trade down on these earnings. If I think that expectations really ratcheted up, that may have been unwarranted. I also am seeing that the trend is your friend as we're going into a lot of these earnings reports generally, with the notable exception of Intel. But companies that have been doing well have been, generally doing okay in earnings. But companies that have been doing poorly have been getting hit on earnings once they actually
hit hard.
So it's like stuff kind of leaks out. Like you think Abbott yesterday, you think Netflix the day before. So I think that those are some themes. I'm curious to see what happens with some of the healthcare companies. You have HCA Hospitals report and United Health on Tuesday. And then obviously the tech. Probably the biggest tech companies that I'm interested in is going to happen on Wednesday evening. We have both Microsoft and Meta reporting. Meta has been really a laggard of the Mag 7 because they're betting really, really big on all this AI, and no one really knows if there's any fruition. I mean, they seem like an also-ran player right now in terms of the AI race, and yet they're spending all of this money on it. So I'm curious to see what happens with that. I think that Zuckerberg's going to tack back into efficiency. I think that the new president of the company is really going to have some innovative things to say in terms of how they're financing a lot of these data center deals. And by innovative, I mean international.
Ooh.
Notably,
the Blue Owl deal got a 17% exit request. People were trying to liquidate a couple weeks ago to get out at the end of the quarter.
Well, what's crazy is what Blue Owl is. So Blue Owl was basically their financing partner for a $30 billion data center project. It's a private equity firm. And they're sponsoring these tennis players at the Australian Open. I saw Blue Owl. I'm like, where do I recognize that name from? And until just now, I didn't recognize it. But you bring up a great point. Blue Owl is, having to shut the doors.
Yeah, so
they wanted out.
So these private credit funds, like they participated in with Meta, you can get in, and typically there's a 5% liquidation allowance per quarter. So say you put in $1 million, at most you can take out 5% of that, assuming that nobody else wants to take out their 5%, because they cap it at 5% of the total fund, and you get put in line. And there are so many people who were trying to get out of that deal at the end of the quarter that they allowed 17% of money to flow out of that fund. So I don't know that they'll be able to do another blockbuster deal with the likes of Blue Owl, and international probably is the move to try and get a little bit of that cashola from somewhere else, because people are not interested in financing more data centers.
And then Microsoft, of course, is going to be very interesting. Software has been one part of tech that has been absolutely smashed. And so we will hear from Microsoft. We'll also hear from ServiceNow. So Wednesday evening is going to be just incredibly, incredibly interesting. We also have United Rentals, which will be talking a little bit more on the construction market and the non-residential side. So this is going to be a fascinating week. I think there's a lot of opportunity, and it's going to be about filtering out the noise and really making sure you react to the signal.
I will say, programming note, we did get a comment yesterday on the Spotify asking us if we should do one long-form podcast a week. And my question is, and you can email us if you're interested in weighing in on this at tmmb@narwhal.com, the morning market briefing, what your idea of that looked like. Because we are putting out, I don't know, roughly somewhere between an hour and a half and 2 hours of content a week on a daily basis. But is that a week recap? Are we going over everything we talked about? Is
it a deep dive into a topic like the deficit?
Is it smooth jazz? The boys just riffing?
Just riffing.
You know? I don't know what that would look like, but
story time with Tom?
My guess would be probably
what's Tom reading now?
This week? Yeah.
We're definitely up for it. So we would love ideas on something you'd like to hear more about. And even if it's not an every week thing, but just getting some occasional content out there, we'd love to do it.
I'll read aloud for an hour.
Yeah, there you go. All right, we'll wrap it up there. Make sure you subscribe. Make sure you like the videos on YouTube. Get your alerts on No Call on Tuesday. Hope you all have a great weekend. Talk to you soon.